Thank you for joining me. Today, I would like to answer one of the most fundamental questions in stock market investing, which I feel like should have been explained a long time ago. So, what are stocks? And in the most basic form, stocks are equal shares of ownership in a company. So let's say that you start a business with a friend and you have equal ownership in the business, which means you get together, you decide that each of you owns half of the business. So if you were to ever go public, each of you would receive half of the outstanding shares, which means you can either have each of you receive one share, or you can have a total of 1 billion shares and each of you gets 500 million shares. There's a lot you can do. There's basically no limits to how many stocks you can issue. Obviously, you shouldn't make it so the valuation puts a share price below 1 penny, but generally, you can do however many shares you want. So, large companies obviously go with millions of shares, and smaller companies obviously go with fewer shares. But in general, you can just decide any arbitrary number of shares. Now, the total number of outstanding shares means you have to own all of those shares to own 100% of the company. So outstanding shares is a number that's used quite frequently, and it just means the number of shares that exist at any place in the world, which means on the computer at this point. But still, that doesn't mean shares that the company doesn't own or anything else. Outstanding just means available for, it doesn't mean available for purchase. It means someone's owning them. But in the case of bigger companies, there might be 8 million outstanding shares. That just means that everyone combined owns 8 million shares of the company. Now, what can happen, or what happens, is that each share represents an equal right to vote on what happens to the company, which means those 8 million shares previously mentioned have 8 million votes in whatever the company wants to do. So let's say someone has a proposal that's to be voted on that says the company will now pay $1 billion in dividend to all the shareholders. Each share of the company will have one vote to decide whether or not to do that. And obviously, if you're Mark Zuckerberg, you own 60% of the shares or 60% of the voting rights. So whatever he doesn't want to do doesn't happen. And then shares can be diluted, which means the company can at any point issue new shares that don't need to have a basis on anything. What that means is, again, all the shareholders vote, but if, let's say, Mark Zuckerberg wants to issue new shares, he can just do that because he owns 60% of the voting rights. So the company can decide to issue 1 million new shares, and those 8 million outstanding shares will now be 9 million outstanding shares. The million shares will be sold on the stock market. And instead of owning 1/8 millionth of the company, if you had a share, you would now own 1/9 millionth of the company, which means your share of the total ownership is now reduced. And likewise, the company can decide to buy back shares, which means if you had one share of the 8 million shares available, and now the company decides to buy 4 million shares, you now own one share of 4 million, which means you now you have double the ownership you had before. All of that needs to be decided by the totality of the shareholders in a simple majority vote. But again, if there's one major shareholder that owns over 50% of the voting shares, he can just do whatever he wants, right? So Apple currently is buying back their own shares, which just reduces the number of outstanding shares, and each shareholder now has bigger share of the company, and supposedly that means they get more dividend. Now, obviously, the dividend will have to be decided in a separate vote, and it might not go up, and the dividend is usually paid per share. So the company decides to, like, say, pay a dividend of $1 per share. That won't change if the company buys back half the shares. They would have to decide they're now paying $2 a share. But in generally, you now own more of the business than you did before, and if the company decides to issue new shares, you now own less of the company than you did before. And while you did have a vote, unless you have a lot of shares, your vote might not mean all that much. So that's the basic of stocks, and make sure to subscribe if you want more videos like this. I'm making new videos every day before market open. I hope you have a successful day.